Hey, good morning, everyone. It's half an hour before the market opens on Friday, August 9th. I'm sorry about yesterday, about the power going out, and we didn't get it back on until the afternoon. And here we are today. Hopefully, it's stable and nothing like that happens again. So, yesterday, the markets were pretty positive. We had that unemployment report, and the news keeps attributing that for the reason why the market went up. The market went up, the S&P over 2%. But really, I can't say that. I mean, there was nothing really significant about that unemployment report. So some people will say, oh, we're super sensitive to Fed data right now. And I don't think so, because how can you be sensitive when we're pricing in 100% that we're going to get a rate cut in September? I mean, what's there to be sensitive to unless the data suggests that we're not going to have a rate cut? And it's very convincing. And it's not just one data point, it's a whole bunch of data points. Because as the Fed told us, they don't look at just one data point. So that one single data point of unemployment, which was basically right within range, is that going to move the market? The answer is no, I don't think so. So why? Why did we move up? Because we're in a high volatility environment and we're chopping sideways. And some people might say, oh, well, it looks like we're bouncing, Kane. Okay, fine. But what happens if we get another day like this? Is that still a bounce? If I just draw another bar like this, did we bounce? The answer is no. You're only saying that because we did this. You're not seeing the rest of the move yet. None of us see the rest of the move. All agree that it's a bounce when we get up to here or beyond up here. For now, to me, it just looks like chopping sideways. And it looks like we hit that EMA 100 and the EMA 8 2 days in a row and we couldn't get past it. That's sounding like resistance to me. And this bottom, well, we haven't moved beyond this bottom area either. So that's just chop sideways. So this is nothing to get excited about. Yes, we did move to 0.3%, but look at our volatility. It's still, yes, we have come down, but it's still 24.28. It's still high. So a 2% swing in this volatility environment, it's just nothing. It's just noise. So this is noise so far. Today, after hitting that EMA 8 and EMA 100 without any compelling news to push us forward, then my feel is that we should pull back. We should pull back before the weekend. I don't think that institutions want to make big bets right now. We are very much in a kind of wait and see type of market. And we have data coming up next week. Inflation expectations, PPI. If we have PPI, we should have CPI. Yeah, core inflation, retail sales, and consumer sentiment. This is all stuff that the Fed looks at. So we'll have a lot more data related to the Fed. But again, unless that data, if any of that data suggests that we might wait longer before we get a rate cut, then this market is going to go down, and it's going to go down pretty hard. If the data suggests that we are going to get a rate cut, then maybe we'll get an enthusiastic surge, but where does that take us? Well, as of today or as of yesterday's close, that takes us maybe to the MA 50 or slightly above it. It doesn't send us screaming to all-time highs or new all-time highs. It just a little bit more positive. So right now, the upward movement is less likely than the downward movement. But for now, we're just in chop. Until we break below that VWAP definitively, we're just in choppy territory. So we don't want to get too long or too short in our portfolios. We're just taking baby positions, trying to ride out this chop. So we have to be nimble. We weren't quite nimble enough on our SMH short. And so we just gave back all of our gains. Okay, that's fine. But we're in a super high volatility environment. So all it has to do is come right back down, and then we got all our gains back. So this is a game of swinging back and forth, and this is why we allocate small size in this time period, and we don't invest everything in our portfolio, because that large swing, if I was invested like 50% of my cash was invested right now, and you're seeing these giant swings, or 100% of my cash was invested right now, then it's like, oh, I'm up 100%. Oh, I'm down 100. It would be too much. So you only play with a small amount of money inside your portfolio, because those large volatility swings can mean a meaningful gain inside of your portfolio, and you're only just allocating a little bit of money in order to do that. And if you allocated a huge amount of your portfolio, yes, you would have a huge gain, but the daily swings would just kill you. I think you'd have a nervous breakdown every single day. So we're just going to hang on and do exactly what we've been doing. We're going to be neutral for the most part, with maybe slight biases to the long side or to the short side in very, very specific sectors. And we're going to do our best to thread this needle. We just maybe have to be a little bit more nimble to get out when we have profits. So if we're doing that and just overnight trades only, that's a little more difficult than if we could watch during the day and say, okay, this is a great time to get out. This is a great time to get in. But we're not day trading, or we're not even swing trading with watching the markets during the day. We're just doing it all overnight for the most part in most of our portfolios. So we take what we can get, and that's fine. We know the limitations of our system, but even with those limitations, we can be really profitable. So don't believe the news. There's a lot of articles coming out right now where, oh, it's a great time to start buying tech stocks. Oh, this hedge fund manager is starting to buy small cap stocks. Don't listen to any of that. The news is designed to get you to do the wrong thing. I don't know how many times there's always headlines. If I went to headlines a month back, 3 months back, a week back, they would be telling you, oh my God, doom and gloom. We're going crazy. We're down. The Dow is, or the S&P drop, the biggest single day drop since COVID, right? That was one of the headlines. Biggest single day drop since COVID. What happened? Because of news like that, and because of the inability to control our emotions, the retail traders sold $14 billion worth of stock. Institutional traders bought, I'm sorry, it's the other way around. Retail traders sold $1 billion worth of stock, and institutional traders bought 14 billion. Okay. So why are the institutional traders buying to such a negative headline? It's because the headline is on their side. They're designed, or they're working in cohorts, or the institutional managers are purposefully playing with the emotional state that is caused by the headline. They might just be reacting to, oh, look at all these retail traders selling. Okay, great. That's a great opportunity for me. And that retail trader sell-off was caused by these headlines. Maybe I didn't cause it, but I'm going to take advantage of that situation. So we don't want to trade based on headlines. We want to form our own opinion. We want to make sure that opinion is as aligned with institutional traders as possible, and that will keep us on the right side of things. So ignore any headlines that you see. I mean, I'm sure if I bring up, let's just say finance.yahoo.com. Okay, well, do nothing. That's what I'm saying. So that's not a bad one. Okay, that's very, very seldom that you see a neutral statement off of a headline like this. All right. So let's see. Let's see if anyone's talking about small caps or SMH, semiconductors. Where is this? Why can't I don't see the highlight. Oh, over here. That's not what we're looking for. News. Okay. So we're seeing like this hyper growth. Let's go into AI type of stocks and not Nvidia. These are just designed to. I mean, this is almost like a pump and dump right here. But I don't want to spend too much time on this. Otherwise, I'd find other headlines that I've seen in the last 24 hours come across my newsfeed. But right now, so it looks like futures are agreeing with me. That looks like we're, at least in the futures market, we might be pulling back a little. Although this is so small compared to the daily movement, it's probably just super insignificant. So let's take a look at our futures. Our S&P is down 35 basis points, NASDAQ 60, and Dow about 23. So even under normal circumstances, most of these numbers are pretty close to random. And in this high volatility environment, this is just random. So we're not going to read too much into that, but just know that we hit so many critical levels yesterday. S&P right at the EMA 8 and the EMA 100. QQQ right at this EMA 8 and MA 150 and at this resistance zone that we drew. It was support zone. And then IWM, the pink line, and the MA 50. And actually, the EMA 100 and MA 150 are right in the same region. And then we look at our Dow Jones, we've got MA 150, or sorry, MA 50 and EMA 8. So everything is sort of sitting at this kind of critical decision point, MA 150, EMA 8. And we're just kind of waiting. And it makes sense that we would wait, given all of the economic reports that are coming up next week. And we also have options expiration, the monthly options expiration next Friday. So we're not going to see, for the most part, unless there's a lot of conviction in a particular stock, we're not going to see huge moves. Well, sorry, we're in a big volatility environment. So we will see huge moves, but we won't see big directional moves. And one way of just affirming that is look at our 90-day highs. 69. That means there's not really any stocks that are trending. Remember, how do we get a large number of 90-day highs? As well, I make a high today, then I make a high tomorrow, then I make a high next day, then I make a high the next day. That means I am trending upwards. So if I'm doing that and 400 other stocks are doing that, then we're really moving. This market is really moving. But if there's only 69 stocks doing that, not really moving. There's only 18 of them going to the downside. And then let's look at other time periods. 52-week, well, there's too much stuff going on here, but it'll give us a general idea. 4 and 11. That's nothing. That's basically, might as well say 0. And I think I have another, I should have like a 20-week. Maybe I got rid of it. I don't use it. Oh, here we go. 20 day, 20 week. Okay, so we can look at the 20-day and then 20-day breakdowns, still 60 and 16, and 20-week, 23 and 13. So there's very few stocks actually moving. So chop. Then there's no reason to think or otherwise that there's going to be any stimulus to go beyond the chop, especially since there's options expiration. A lot of stocks right now, let me see if I can find an example. I think Johnson & Johnson is the example that I saw yesterday. This is part of my new software that I had help coding up that is helping me quite a bit. Johnson & Johnson. Where's... Okay. So this was 2 days ago, but still, look at August 16th. out of all the options in this market, so this is a better representation, this 3D graph. Out of all the options in Johnson and Johnson, look at these tiny little humps. Okay, there's not really any to the downside. That means this market is really anticipating that the Johnson Johnson is moving upwards, meaning that basically there's a whole bunch of calls and very few puts. I can see that down here. Very few puts, a whole bunch of calls. But guess what? They all expire August 16th. Not all. Some expire the 9th, but look at how many expire the 16th. And what's going to be left after that? Very little compared to all of the options. So if I remove this peak, what does this chart look like? It just looks like nothing, right? It's pretty flat, which means that after that, either no one is interested in Johnson & Johnson, which isn't the case, but that money that was in these options will get allocated to some other option in September or October, and I'll get a new peak. So I won't know. No, they can't decide that until this actually expires. So because right now, if I remove this peak, everything looks flat, which means that there's no bias anywhere after this Friday or next Friday. Okay. So what's happening with Johnson Johnson? Yeah, we got a little excitement over the last few days, but look at this, sideways into expiration. And that's what we expect. And then after expiration, we might actually move up or down, depending on where all of that concentration ends up being. So we're just going to expect that in this market, we're really just going to chop sideways, a large range chop. And we just have to be either sit on the sidelines for now and be willing to just wait until we get a bias in the markets, or we take small allocations and we take little tries at these quick moves because they're so big and so volatile right now. Just a 1 day move like that can be 100 or 200%. So we're choosing to be a little bit more active and allocate some positions, but again, small positions in very select sectors, and we have to be nimble. So today, what are we going to expect? I'm going to expect downward movement for the most part. We could just go sideways. Upward movement is unlikely. It's just not like, I mean, we could. And if we could, I'd be very surprised if we do, I'd be surprised if we go above that EMA 8. But for the most part, I'm anticipating that this is mostly going to be a sideways or maybe a down day. And again, a down day might look huge like this day, but if it gets stopped out by that MA150 or that VWAP, then it's really just not significant, and we're not going to get too excited about it. So really, we have our targets in for the positions that we have. If we hit those targets, great. If not, we're expecting chop pretty much all next week anyways, unless we have any weird surprises in these reports that are coming up, or towards the end of the week after we've seen several reports cumulatively. If they start to tell a story, then we might start to get a directional bias. And once again, we have so much coming off on the August 16th expiration that even if we start to get really biased in because of those reports, a lot of money is tied up in the current expiration. So either they have to sell those off, or it has to be in reserve cash that these new investments are being made. And for the most part, institutions are going to wait to roll their positions either on Thursday or Friday. So we're really just looking at chopping sideways, most likely through Wednesday, and then we'll see on Thursday and Friday. Okay, so I think there's not too much else to look at. I mean, momentum levels haven't really changed. They're flat, right? We looked at it with the 90-day highs and the whatever day highs. Everything's just flat and chopping sideways. So don't get excited. Don't think, oh my God, we're falling if we get a big down day today. And don't get too excited if we go upwards, if we get a 1 or 2% move upwards into that EMA 8 today. So it's really just we're in a choppy environment. We're going to be at least for another few days, barring big news. At this point, it's probably not going to be economic. So if you had big news, it would have to be some sort of geopolitical or non-US, right? Unless something weird happens, like I don't know, Joe Biden dies or something like that. So yeah, that's it. That's nothing else to look at today. This is going to be another line. Let's just see. Let's take get out the popcorn, see how volatile the day is, or go and do something nice with your day, and then come back and look at the market as we close up. So have a wonderful rest of your day, and I will see you in the post market session. Oh, actually, Friday. It's Friday. We don't have a post market session on Friday. So have a wonderful rest of your day and weekend. I'll see you on Monday.